Hello, everyone, and welcome to today's Green Leaders Fifth podcast. I am Ruba Nassar, and I'm delighted to host today's episode with our guest speaker, Ms. Hanane Hayek. She's a sustainable finance expert. Thank you for joining us today, Hanan.
Thank you, Ruba, for having
And
me.
so, just like to kick those who don't know you yet, Mm. Can you introduce yourself and share what brought you into the world of green finance?
Yes, hi everyone. I'm Hanane Hayek, a global ESG, sustainability, and sustainable finance expert. So basically, I work at the intersection of buildings, finance, and climate policy. My background is in mechanical engineering, energy efficiency, and renewable energy. And for more than a decade, I have been helping real estate and financial actors to integrate ESG and climate criteria into their strategies, first across the MENA region and for 4 years now across Europe. So I originally started my career on the design side, very close to projects, to clients. And I quickly realized that no matter how good the design is, nothing really happens if we don't have financing. And that observation was increased over time, especially when we were working on value engineering, where most of sustainability measures were out of the project for financial reasons. So that observation made me increasingly curious about how financial decisions are actually made behind the scenes and who decides what gets built or how and what gets implemented in the project. So, and in fact, full disclosure, my journey into green finance started quite organically. I was delivering green building trainings to bankers as part of my role in IFC. And during those sessions, I understood how powerful the role of bankers is in shaping the real estate market, among others. So from there, I became convinced that capital allocation is one of the most powerful levers to accelerate the low carbon transition. And working with developers, investors, public institutions in Europe, after the MENA region showed me that if we change how we assess risk and how we evaluate the value, especially in buildings, we can support both environmental goals and social resilience from Beirut to Paris and beyond.
That's really interesting to hear, Hanan. Thank you for sharing your journey. And in terms of green finance or sustainable finance, how would you define that, and how it's different from the traditional finance?
So, green finance, in layman terms, it's simply using money on purpose to support projects that are good for the environment. So, in practice, it can look very familiar, like a bank giving a loan to build a new green building that uses much less energy and water and resources, or a loan to renovate an old building by, for example, replacing windows, improving insulation, upgrading the heating or the cooling system so the electricity bill is reduced. It can also be a green mortgage for a family that is buying an efficient home where the bank offers slightly better conditions because the home is cheaper to run and therefore it's less risky over time. So we actually have a very good example from Lebanon to those who worked with the NERIA loans. Those were loans that helped households and companies to invest in solar panels and efficient equipment and even better buildings, certified buildings with improved conditions because the projects were saving energy and reducing emissions. So, in a way, I can say that in Lebanon, we were already doing green finance before it became fashionable, I might say. So we just didn't put that trendy label on it at the time. We were practicing it without knowing we were on brand.
Interesting. And since you mentioned these NERIA loans and the applicability of Lebanon, and from your experience, what do you think are the biggest misconceptions people have about green finance?
I think that one big misunderstanding is thinking that green finance is just about special green products and big names, difficult technical terms like green bonds or green financial instruments, kind of limited edition items. The truth is that the concept of green finance is to make all the money a bank or investor manages greener over time. So even the usual loans and the buildings they already have in their portfolio. Another myth for me is that green projects must cost more. Actually, buildings that save energy and infrastructures that are built to handle climate change in the long run, they will usually keep their value much better, face fewer risks in the long run, especially now with the new rules around the world with rising energy costs. So green projects do not actually cost more, uh, or they might be, uh, we might have to pay a little bit more upfront, but it means that we are actually keeping the value of the asset in the long term. And there's also another misconception that I'd like to bring up from meeting with some stakeholders. It seems to me that people think green finance is only for rich European countries. But I think that in places like the MENA region, including Lebanon, green finance is even more important because this region is facing big challenges like extreme heat waves, like water shortages, and also changing in energy needs. So many financial systems in these countries that need to rebuild the trust and become stronger could be learning and building on the European experiences while adapting to the local realities and the local needs in the region. And that, in my opinion, is an interesting takeaway.
Thank you for sharing that. And in terms of, so we talked about what defines a green finance and the difference between traditional finance. But in terms of indicators or metrics, is there a specific indicators that truly determine whether a project is green, or can we define or help us to define that this project is green or sustainable?
Well, that's a big talk. That's a big debate. But to answer that, maybe when we talk about what makes a real estate project green, it depends on the specific project, of course. But generally, several clear factors need to be checked carefully. In Europe, for example, we have frameworks like the EU taxonomy, which is now the talk of the town. It's becoming a big trend. And the taxonomy provides strict definitions and strict technical thresholds to say what counts as green or to identify what counts as a green project. And not just in real estate, it includes a whole set of economical activities. But when it comes to buildings, I think the clear definition is that it should meet certain energy efficiency levels, emission limits, water consumption limits, etc. So beyond just numbers, we have credible green building certifications that can verify if the project really meets those standards because they are verified by third parties. And the certifications look at things like the whole life cycle of the building, whether it's designed to be able to handle climate risks like extreme heat and flooding, because climate change adaptation is also becoming mandatory in most of the green building certifications today, in addition to water consumption and a lot of other factors like resource use, like circular economy. I mean, if we get into these details, we're going to have a whole other podcast to talk about it.
Mhm.
But the key things measured usually include greenhouse gas emissions over the building's life, how much and what kind of energy it uses, water consumption, the use of material, they are recycled, everything related to circularity, the environmental risks. So it's also important, and not just in Europe, but in MENA too, to make sure that project doesn't harm nature or communities, especially in places where social and economic conditions might be compromised. So calling a project green are is gaining a whole new definition today. It means looking at all these parts carefully. Now we are seeing that the term ESG is emerging more and more, which means that we're talking about environmental, we are talking also about social, and also about governance factor. And if I go back to the EU taxonomy that I'm giving as an example, the EU taxonomy have also minimum social standards, and these safeguard a minimum standards and social conditions across the communities in which the projects are built.
So can we say I mean, it seems that there is a lot of indicators that incorporate or takes into consideration how green project is, but can we say also that it's a location specific? Does that depend on the location?
Of course, the location of the project is extremely important because it will depend on how this project will interact with the community in which in which the project itself exists. But we also have to know that there are a lot of projects that are existing, and we cannot punish them because of their location. So the idea is also how to make the most of the community in which we are, how to protect it, and how to interact properly and in a sustainable way with the community. We also see that the whole concept on biodiversity are emerging, how to protect biodiversity on the long run. I will circle back to the climate change adaptation because it's becoming one of the most important points, especially when it comes to green finance. Because when we talk climate change adaptation, it means also protecting these assets and protecting investment from potential climate risks that are becoming more and more real. And if we look around us, we have more and more extreme climate-related events, which means that every investment today has to assess their climate risk. I can also talk about another point, which is insurability. We have a lot of projects that are the insurance premium is becoming extremely high because these projects are also located in compromised areas or in areas where we have high climate risk. So I would
Also,
say
the climate risks differs from location to other. For example, the climate risks in Saudi Arabia would be mostly related to heat, while in other countries mainly might be related to flood. So the climate risk is different.
the climate risks are different. There are today a lot of tools that can help us assess climate risks, but I would say that some of a part of the trickiest part of assessing climate risk is that it's not always what it seems. It might be natural to think about a heat wave, for example, in Saudi Arabia, but we don't easily think about flooding. Whereas flooding would be the actual risk because the country is not prepared. The infrastructure, the buildings are not prepared to face an extreme rain event. So whereas the country is prepared for an extreme heat wave and they are already used to managing this kind of situation. So we can have a
Totally
whole
agree.
different conversation on this particular matter.
Definitely. And before moving on to, I would say, to our next discussion topic, since you mentioned the taxonomy, is it possible for you to briefly introduce this or make it more simpler to the audience to understand what is exactly and how it's applied in the EU?
Yes. So you're basically asking me to summarize in 2 minutes what I've been working on day and night for the past 3 years. Well, I try to make that happen. So basically, the EU taxonomy is a classification system of the economical activity. It was built essentially to bridge the language gap between the investors or the financial community and the technical community. Today, I can say it's green, you can say it's green, anyone can say that any project is green. The whole concept of the taxonomy, and not just the EU taxonomy, there are many countries today that are building taxonomies. The concept of a taxonomy is to build a classification to identify what exactly allows us to call a certain economical activity as green. So it's a set of requirements, and these requirements have to be met by any project that needs or that wants to be financed under green finance.
Okay, I would say that's in a nutshell. Thank you
In a
for
nutshell, exactly.
clarifying. Yeah, thank you for clarifying that. And what would you say that are the biggest barriers that slowing down investment in sustainable projects?
Well, like I just mentioned, we had a big problem which is the language gap. Many investors think that green projects are risky. It's something that they don't understand. We can't go to a bank and ask them to understand technically that a building is built green or not. So, and especially in places where politics or money value change a lot, it makes investors nervous about putting their money in real estate investments. And since technical experts don't always have the right language to talk to these people, to the investors, this is the language gap that, among others, the EU taxonomy was trying to bridge and trying to build a framework to that. Because we also have another problem, and that brings me back to the EU taxonomy, which is greenwashing today, because we have a lot of developers and a lot of stakeholders that claim they are working on green projects. But if we dig deeper, we realize that part of their claims are not substantiated and parts of their claims are not actually correct. So that will, if you want, that brings us to the next problem, which is that we do not have good, reliable information, and it's very difficult for investors to be able to take decisions without clear data, without facts about what a green project really is. How can an investor today tell the difference between a project that is genuinely green and another one that is just claiming that it is? So that's part of the main, that's part of the same problem, but from a different perspective. And there's also the skills gap. So many people who lend money and build projects, they don't fully get the new rules and standards that tell us what counts as green. We still sometimes struggle with certain developers to explain to them, why do you need to have your project audited or verified in order to be able to claim that it's green? So this skills gap, of course, there are a lot of initiatives that are trying to bridge this gap. For example, and that's, I might say this podcast is part of this
Raising awareness.
exactly
Yeah.
trying to bridge this skill gap, but it's still there, especially when it comes to for
The
example.
developer, I would say the gap is huge, especially in the construction sectors, as you mentioned, in the developers, in the contractors, in the site staff. Would you agree?
Yes, I do agree. And I don't think that raising awareness on one side of the value chain is a thing, but also retransferring this gap within the right language to the other side of the value chain, which is the bankers and the investors. That's a whole other story, because there's the skills gap inside each part of the stakeholders' sides, and then there's the whole gap in between these stakeholders when they get together and try to move forward. And I think, which is the cherry on top for the challenges, it's also that I'm trying to find a diplomatic way to say it, but government rules, they change a lot. They don't match up well.
Mm-hmm.
It's confusing. So when it's confusing to the people in the sector, when rules are not clear, it also slows down investment. So
Mm-hmm.
having a clear, agreed upon rules like those in Europe, for example, in the MENA region, it's important because if you're talking about financing in general, it needs trust. Today, if you go to the bank, and that's in layman terms, if you go to the bank and you ask for a loan, they have to check your background, they have to check your financials, they have to make sure that
Mm-hmm.
you will
You're
pay back
credible.
this loan.
Mm.
So let's just talk about, we're just talking about one single loan for a private person. So think about bigger investments. If you don't
Mm-hmm.
have trust, you cannot move forward. And building trust without data, with a skills gap and with a language gap, it's very difficult. So this is where rules can come and help
The support, like
stop
for example, you
bridging.
mentioned. Sorry, for example, you mentioned the greenwashing, and we face that a lot in our say sustainability project. A lot of like investors or developers claim that they are sustainable, or for example, they are LEED certified project, but they only like registered the project or followed the compliance, but didn't actually get the certificate. So having some monitoring based regulation or law would help that if it's part of the I would say law enforcement.
Exactly. That's why, for example, the countries have to try to catch up to build a trust for green financing. That's for sure. But there's also, if you push the regulation as well, and that's one of the things that we are facing now in Europe, you fall
Mm-hmm.
in the pit of green hushing because the regulation is asking for too much, and people who are doing things well and well-rounded are afraid to talk about it because they are worried that they will be judged because they are not meeting this or that criteria.
Mm-hmm.
So it's very tricky, and the
Mm-hmm.
financial institutions, they sometimes they use this instability to say, well, there you go, if you people can't agree on what you want us to finance, how are you
Mm-hmm.
asking me to give you money? So
Mm-hmm.
it's somewhere in the middle. There's a balance
There should be a
between all of
balance.
this.
Definitely. And coming back to the MENA region, so we talked about the biggest barriers. Do you think that these same barriers are applicable to the MENA, or is there something specific to the MENA region that you would like to highlight?
Um, of course, they do apply, and I think that that we have, in addition, the structural challenges that we just talked about, because we have
Mhm,
political instability in many
mhm,
parts of the MENA region. We have
mhm,
currency risks, and we have underdeveloped capital markets, like in Lebanon, for example.
mhm,
So this makes long-term green investment more complex. But at
mhm,
the same time, everything related to climate vulnerability, like we just said, it's very high. So we have heat waves, we have water stress, and this is becoming extremely dangerous. Especially,
mhm,
I was reading a report yesterday in Jordan, for example, the water stress
mhm.
is becoming a real challenge,
Right.
and we
Mhm,
also have infrastructure gaps. So all of these require significant adaptation finance.
mhm,
So, and that's even more challenging because we have all of these together. And we can
mhm,
also add everything related to data and transparency. So ESG disclosure is improving, but many companies and even banks, they are still at a very early stage in reporting climate risks, in understanding that climate risk reporting is important, and in reporting also environmental performance.
mhm.
So, I mean,
Yeah, I would say transparency is is the biggest challenge here in the MENA region. There is a lot of big commitments, but we see all of these commitments, but the amount of reporting or how much it is aligning with these commitments, there is a cap.
Exactly. But still, we are talking a lot about challenges, but there are some positive signals because we
Mm-hmm.
do have corporate green bond issuance in certain Gulf countries, and we have growing interest from regional banks that are supported by big investing institutions that are trying to build sustainable finance capacities across the region.
Mm-hmm.
So we try to pick up on these positive
Yes, the
signals,
positives,
even though they're
yes.
not very strong, and try to hope for the best.
Mm-hmm. Uh, I mean, I totally agree because like there is a lot of challenges, but along with these challenges, as you said, there's comes opportunities. Um, Okay, and my next, I would say, question is related or is integrated between the green finance and technology. We're now in the technology era, AI, blockchain, data analytics. So, how do you feel changing the landscape of green finance in terms of all of these big technology inventions? I would say.
Yeah. So, I just mentioned the barriers of related to data, related to access to reliable, granular data, and I think that AI and everything related to advanced analytics can help a process. For example, building performance, climate scenarios to be able to assess physical risks, transition risks at portfolio level in a more efficient way. So for real estate, this means that we can dynamically track emissions, we can track compliance with frameworks like EU taxonomy or any other standard for that matter. And whenever we are talking about AI, about digital platforms, we are also talking about blockchain, and all these platforms, they can enhance transparency, traceability, which is extremely important for investors so that they can make informed decision. For example, in tracking the use of proceeds from green bonds, for example, documenting the life cycle of construction materials in the context of circular economy. We have a lot of data points that could be extremely helpful if we can collect them, and especially in regions where it's the harsh truth, but we need to face it. But whenever you have institutions that has been shaken, where trust is practically non-existent, like such for example, in Lebanon, everything that, I mean, transparent, verifiable data flows, they play a key role in rebuilding investor confidence in sustainable projects and being able to attract more capital and more investments. And that applies to green projects, but I think it will also help in every aspect of attracting investment for that matter.
Interesting. And I think the audience, on a personal level, I would say they are interested to know who or what inspires you in continuing or in use making an impact in the sustainability field or in the sustainable finance.
I think it comes from probably first, there's this overwhelming scientific proof that climate change is real and that it's
Mm-hmm.
urgent. And this reality somehow drives my work every day.
Mm-hmm.
Second, and I could say that the people that I've met along the way, from
Mm-hmm.
engineers, peers, bankers, developers, first in the MENA region and now in Europe, who are working really hard to balance tough economic realities with big climate goals, with big social goals. I think that there's a lot of creativity, a lot of determination, and that keeps me motivated. Now, for example, I'm part of hubs where we talk about innovation finance, and I feel very privileged to have this engineering background and this financial knowledge. I'm not a financial person and I'm not a banker. I wished I was an investor, but I'm not yet. So working at this crossroad is extremely inspiring. It's motivating. And also, I mean, I'm inspired by the communities, but by the networks where people get together to share knowledge, to share experiences, especially linking European expertise with the challenges of the MENA region. On a personal note, when I moved from Lebanon to France in early 2022, it was like being thrown in a cold bath. I had to work really hard to catch up with the new system, with the standards, understand policy regulations, and that was kind of shocking because we don't have that in the MENA
This
region.
knowledge, yeah.
Yeah, that experience, it made me realize how valuable it will be to me one day to bring this knowledge back to where my journey started, to help to build a more sustainable future for the region that I come from and that I love.
And it's interesting to hear that you're bringing back the engineering background to the finance sector to bridge the gap. That's good. I'm coming from engineering background. That's good to hear. Um, Thank you, Hanan, for sharing your thoughts. Would you like to share anything to the audience or specifically to the youth that are listening to this podcast?
So when I started working as a green building and energy modeling consultant more than 10 years ago, sustainability was a niche. And when I joined the World Bank as an international consultant with the International Finance Corporation in 2020, green finance was also a niche. Today, things are different. So green finance is becoming the new baseline for credible finance because the world today is climate constrained, from Paris to Beirut to Riyadh to Casablanca. So for the MENA region, this is a necessity. And most importantly, also an opportunity. Necessity because the region's climate vulnerability, like you said earlier, Ruba, and an opportunity because I want to believe that there is time and that we can leapfrog to a smarter, more efficient, and more resilient models of development in the MENA region. And I think it's also an opportunity to start building partnerships between Europe and the MENA region. And it's not just about sharing knowledge or sharing experience or bringing some takeaways from some experts' work. It's really combining experience with urgency and regulations with innovation, because Europe can bring a lot of lesson learned over decades, but the MENA region can bring the drive, the innovation and the motivation to drive the change, because they like to be on top. They like to be the first to do things. So I think that together they can form a powerful force of change. And I think that every person listening has a part to play, whether you're a banker, you're a policymaker, you're a student. It's not just about funding projects, but it's about investing in the future that we all deserve and that hopefully we will be able to build together.
Thank you so much, Hanan. That's really inspiring. Thank you again for joining this episode and podcast from Green Leaders. We hope that we can have another one more, getting more into details into the green finance. Thank you so much and have a nice day.
Thank you, Ruba.